So what are your thoughts on Charlie Munger comparing crypto to a venereal disease, claiming its main usefulness is for extortion, kidnapping, and tax evasions? Whoa, I think that's kind of extreme. Wow. And now for those of you not familiar with Charlie Munger, he is partners with Warren Buffett. He's been running Warren Buffett's fund, Berkshire Hathaway, for many decades. Now, I know that Warren Buffett and Munger are not crypto fans. Now, Warren Buffett, the way he invests is he's a value investor. There's two types of investors. There's value investors that buy cheap stuff, right, with good visibility in terms of cash flow in the near term. Then there's growth investors like venture capitalists and a lot of hedge funds that buy stuff that's growing quickly, that's not cheap yet, but will be in the long run when growth matures. And so Warren Buffett and Munger, they don't invest in things that they don't see much visibility with. You know, Warren Buffett invested in Coca-Cola many, many years ago. This is a prop from one of my MBA classes, because he had the simplistic logic of saying many years ago, in 5 years, will people be drinking more Coca-Cola or less Coca-Cola? So, and it's recession proof. But the problem is that if you don't think about what's coming next, meaning the virtual economy and cloud computing and all that stuff and NFTs and metaverse, then you'll get stuck behind and you'll never keep up with the best investment trends. That's my humble thoughts. Now, Warren Buffett has turned around a bit. He's been investing in more tech companies like Microsoft and Apple because they've gone from growth to value. And I remember Warren Buffett, when he came and he taught one of my classes at Columbia. He also graduated from Columbia. That's the only thing we have in common. But he came to Columbia to guest lecture back in '99. And one of my colleagues and my classmates in the class started pitching a tech stock to him in front of 100 students. And Warren Buffett, very politely, very, very nice guy, he said, "Son, I'm going to stop you right there because I don't know where that technologies company's products will be 1.5 to 2 years from now. And so I don't invest in what I can't really forecast in the long run." So he keeps it simplistic. He's called the Sage of Omaha for a reason. That's why he doesn't like investing in really, really high growth stuff that's speculative. Now, I'm a growth investor. I used to be a value investor. And most people in university are value investors because they're kind of taught, you know, buy low, sell high, buy cheap stuff. But I'm a growth investor. And when I worked in venture capital in the hedge fund industry, I became a growth investor because I don't care what a company's valuation is today or earnings are today or tomorrow. I like to calculate what earnings are going to be in 10 years. And then what I do is my price earnings multiple target price is based on my earnings estimates in 10 years, which I teach in my MBA program in a lot more detail.